This is the Alhambra Investments Weekly Market Pulse with CEO Joe Calhoun. And Joe, you had a very interesting title on your written report this week, Follow the Delphic Maxims. And for people who don't know, those were inscribed on the Temple of Apollo in Delphi, and they were know thyself, nothing to excess, and certainty leads to insanity. So let's take those one by one, and you just explain why that's important for investors, especially now as we're going into the end of the year.
Well, first of all, the Delphic Maxims, just so you know, there's 147 of them. Those three happen to be inscribed on the temple. So those are considered, I suppose, the most important ones. So the first one is know thyself. And I think as an investor, that's probably the most important thing, is to know yourself, to know your risk tolerance, to know what your biases are. I think that's probably the biggest issue. I tend to be optimistic, so I have to temper that. Other people tend to be more pessimistic. They should temper that. Some of them do, some of them don't. But you need to know yourself. And these biases, internal biases, it's behavioral economics. I mean, they put lots of names on it these days, but it doesn't really matter. What it really means is that you need to know yourself and know what kind of biases you have as you enter this decision-making process. And so if you're, like I said, if you're too optimistic, maybe or tend to be too optimistic, then maybe temper that a little bit. That's all it means. All of these things, all the Delphic Maxims are about moderation in some way, shape, or form, I think is probably the best way to put it. You just don't want to do, look, these are just really simple rules, or whatever you want to call them, that you can follow that will help you be a better investor.
Well, let's talk about number two on that list of top three. It is nothing to excess, and you kind of alluded to that.
Well, yeah, I mean, look, I see this all the time. We talk. I've written about this before, about people think that investing is this all or nothing thing. I need to be all in the stock market or all out of the stock market. And of course, that's not the way the world works. The world is shades of gray. And I think that when you start making these big bets, you get yourself into trouble. We saw it after the 2008 crisis, when people bailed at the bottom and they got out of the market. We have run across, since that time, we've been talking to prospects and investors out there, some of them who have been out of the market for 10, 12 years. So they made an extreme bet. And when you make extreme bets that way, it's hard to get out of them, because you have to admit that you've made a mistake. And boy, one thing I can tell you for sure is humans do not like to admit that they've made a mistake. All of them. I'm no different. I don't like to admit that either. It's tough. But if you don't do things to excess, you don't have to have those conversations with yourself when you go, look, I was wrong. If you're wrong about a little thing, it's not a big deal. You correct it and you move on. If you're wrong about everything, about a big thing, then you've got a huge problem and it's harder to solve. So just don't do things to excess. Listen, I equate this in investing to diversification. You need to not do stocks to excess. You need to not do commodities to excess, or gold to excess, or whatever the case may be. It should be a diversified portfolio. Don't do anything to excess. Come up with a plan. Have a strategic allocation plan, and you need to follow it. And it's that simple. These maxims are just ways to remind ourselves not to do these dumb things, so to speak. That we see it all the time. So we know people do these things, and we just try to guide them to be more middle of the road.
Well, and that's one of the reasons we don't make major bets on any one thing in the portfolios we manage.
Yeah, look, we're conservative investors. Our client base is conservative, and that's what a conservative investor does. You diversify, and you don't make any big bets on one thing. We're not trying to be to produce the highest return we can possibly produce. That's not what we're about. And it's not what most investors should be about. Maybe if you're a hedge fund or something, you're swinging for the fences, that's fine. But we don't swing for the fences. We're trying to hit singles and doubles. The occasional triple. That's maybe with an individual stock, we might hit a home run. But, if it's going to be 1% of our portfolio, it's not even that's not going to make a huge difference. But it will make a difference. So, yeah, we don't do that big bet thing.
All right. So number three on the list of top maxims is certainty leads to insanity.
Well, that's kind of related to the other one about people getting all in or all out, right? They convince themselves that something's going to happen whether it's a recession or inflation or the dollar is going to collapse or what. They convince themselves of this big thing is going to happen. They're certain. And because they're certain, they make the big bet. They violate maxim number 2. And when they do that, that's when they get in trouble. You either make the big bet and you're wrong and you lose a bunch of money, or maybe you just sit on the sidelines and you don't participate. But either way, it's a big mistake. And so, I think again, don't do things to excess is probably is as important as number 3.
And just to let people know, this is your last report for the year. When you write every week for 11 months, you get worn down. So you're going to take a little time.
Yeah, look, we certainly are going to be watching markets. I will be. Everybody will be here at Alhambra. We're going to be watching your portfolios, so don't worry about that. And if something happens that requires me to communicate, that is big, that really does require me to get out there and say something, I'll do it. But otherwise, we're going to have Marcelo sit in for me for the next few weeks. He'll be more just the facts, ma'am, tell you how the market's going, tell you what's going on. If any trends get broken, we'll talk about that. But otherwise, we're just going to try to think about the rest of the year, start thinking about how we want to be positioned for next year, and just go from there. So we want to just wish everybody happy holidays. We're here if you need us. And certainly, too, I want to mention this. Look, this is a good time of year for people to be doing a review of what they're doing. If you're doing something, if you're investing and you've got an advisor or you don't have an advisor, it doesn't matter, and you're not happy with the results you've been getting, or maybe even if you are, I don't know, we're happy to give you a second opinion. We're not going to charge you for it. You can send us statements. You don't even have to give us your name if you don't want to. We'll review what you've got, do a report, tell you where we're spending too much. We look at expense ratios on funds and things like that. We'll look at your asset allocation, tell you where maybe somebody's violated one of these maxims, if they've got a big bet on something or something along those lines. And we will review your portfolio for these things and get you back a report that you can use. You don't have to use it to come to us. We appreciate it if you do, but you don't have to. We'll do it for free. And we do this all the time. We've got a system down now where we can do it pretty quickly. It'll be a few days turnaround, but we can get it done. You send us an email at info@alhambrapartners.com, and we'll be happy to answer you.